All right. There's some of these fun ones that we take a look every now and again. This one got a little bit of airplay over the weekend. The death cross in gold. Are you bullish or bearish? Do you listen to this? What are your thoughts?
Well, thanks for the introduction. I'm always a pleasure to be joining you. I pay attention to it. You have to pay attention to it because you're going to see some systematic trading or algos that they're execute thereafter are going to pay attention, and it's going to happen. But a lot of the time, these crosses can happen at the end of a move. Now, the death cross or the golden cross, which is the 50 going back above the 200, is a bit more than some of the shorter term duration daily crosses, like a 21 and 54. And speaking of a 21 cross below the 54 in the S&P on March 15th on the low. So a lot of this happens.
So there's slow down for the viewers. 21 day, 54 day, right? Is what you're talking about.
Yes, 54 day. Yeah, and then that was the low in the S&P in March. So there's a lot of other things you have to layer in when you're looking at something, because that was again the low in March, and the S&P really rallied from there. We actually just recently had a 21 and 54 cross to the downside in the S&P, and that's why it's on top of my mind. But I think there's credence here to pay attention that there's exhaustion in the market. But what's going to be the catalyst that drives things down if this were to be the case? And the fundamentals are there. But first, let's get to some of the other technicals. That gold has struggled to really hold above 2,000 in this December contract. In fact, the August contract rolled into December contract right at 2,000, and then it traded below it. And it was basically a rejection of price acceptance there. Silver, the same sort of thing. Silver's the September contract rolled over to the December contract last week. It has a rejection of price acceptance, paying that premium on the roll. Now, on a more fundamental basis, my biggest headwind I'm watching are two things. Two biggest headwinds is the rise in rates as well as the currency situation. So first, the rise in rates. All this treasury issuance, all this government spending. How are they going to pay for it? By issuing new treasuries and the other supply that's come in. And the start of June, the start of July, or the start of August, we've seen really heavy move lower in the treasuries. And so this has been no different to start September. And that heavy move in treasuries means rates are rising, especially as inflation's cooling. It means real rates are rising, and real rates I call the number one biggest foe of gold. So that's being a headwind now. And then you also have the September contract. That silver September contract rolled over. But you have the yen as well as the Chinese yuan. Extensive weakness there as the U.S. dollar strengthens. And that's going to be the big thing. I think is a big headwind as the U.S. dollar strengthens to keep them at a heavy trade on the gold and silver. Yeah,
there's a little bit of a black cloud over there. I'm glad you brought up both the dollar strength and also that real rate, right? Because we brought it up on the show on Friday and Thursday last week because we thought it was that important that it's actually hurting a lot of other things, maybe even the consumer being one of them, because when you take away that inflation rate of high of like say 9% versus where the Fed funds rate was about 1%, we started at a minus 8% in real rates. Now we're about just over 2, maybe 2.25. That's pretty restrictive, and that could start to bite too. So it's not going to hurt just the consumer. It could hurt gold, like you said.
Yeah, and that's what we're seeing. We're seeing a lot of the heavy move here, a lot of selling pressure in the treasuries to start the week. We're also seeing selling pressure in the Japanese yen. And here's the thing: even though they're issuing more treasuries, one of the things that I'm watching very closely this week, and I put in my morning note, is we had a lot of data. It was basically Goldilocks data all week last week, which should have supported precious metals, and it did. Should have supported the equity market, and it did. But I think it played out. We had jolts coming down. We had consumer confidence coming down a bit. We had ADP payrolls down. GDP was revised a little bit lower. Non-farm payrolls, Goldilocks. All this was Goldilocks. But at the end of the day, what we saw was a rate cut from the Fed go from June to being priced in more favorably in May. And really, at the end of the day, if the Fed's cutting rates, what are they doing? They're reflating the economy, essentially. So if we're to see this reflation trade, guess what turned red pretty quickly on Friday? The bonds. And guess what followed? Gold and silver. So the bonds turning red on Friday, tells me that we could be seeing this reflation trade being priced in. And this goes back to everybody say the bond traders are the smartest guys in the room. And maybe they're seeing something here that the rest of us aren't right now. And that's what I'm trying to pay attention to those. What are the bonds doing? And so if the bonds continue to sell off, if Congress revises their debt issuance again here in the next couple of weeks, that's going to be another reason to see bonds selling off. A lot of these hedge funds are short right now. And listen, I was somewhat bullish on bonds for a trade out of that hole. But when they turned red on Friday, I got the heck out of the way quickly. And I'm nervous. And I'm nervous where we can see gold and silver here. And that brings it right back to the death cross now in gold. And now you got a technical catalyst with weakness and other fundamentals weighing on gold. What happens here is the real question.
Watch it.
And I'm worried.
We're going to watch it. That's why we had Jan, and by saying that they're going to be selling treasuries, as treasuries going down, it means those rates are going higher. That's a problem. All right, we got to jump. Thank you very much. Bill Baruch coming to us from Chicago. He's with Blue Line Futures. Let's take a look at the gold. My go-to.